do 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 do. All right, vslr, Vivint Solar Inc. And guys, go check out screener.nextbigtrade.com. That's another one. Just having fun, choosing the sector, choosing the index or US TSX or LSE, and then just going through those weekly charts, those links on the right, you'll find them. And this one caught my attention. And here we go, guys. Monthly candle chart. Let's see where our monthly defined breakout lines are, or breakdown. Create some black space. Imagine, leave some room for your brain to try to imagine where the price action could be. And look at that. You have a nice breakdown line at 255. Okay, here we are. Here's some resistance at 590. But we also had here is a breakout of this smaller pattern right here. Patterns within bigger patterns. Sometimes they share the same resistance line, support. Sometimes they share the same resistance line. Targets get you en route to previous resistance. And this one, the target of this base has been reached. Yeah. And right now might be going here, hitting some resistance here around the 590. And well, maybe a pullback down here that we might see on the weekly. Remember, this is monthly defined resistance. And when we go on smart time frames, it's not going to match up with the open and closes of the weekly time frame. You might have some closes above on the weekly, but that's the noise. That's the wick here. These wicks. This one here, that's noise. So on the weekly, you might have some closes and openings below that monthly defined support line here or resistance. And just that the monthly has more impact. So the monthly close, decide that my support is 590, guys. My resistance is not higher than that. I need to close below that level. That's what the market decided to close the end of month. And all the rest was just intra-weekly noise. And on weekly candles, the wicks are intra-weekly, so daily candles. All right, let's go. So right now we know that we have the trend is up based on this pattern here that exploded. 1, 2, 3, 4, 5, 6, 7, 8 months, 9 months. En route to target, hit its target. And now on the weekly, this is probably going to look like a stage 2. And just note the 590 level as potential resistance, and expect maybe a pullback at that level. All right. If you expect it, you won't panic. If you don't panic, you don't fear. If you don't fear, don't panic. Ichimoku cloud. So you see right now we've been in nice stage 1. No more overhead resistance. Oh, this looks kind of nice. Check it out. Hold on. Okay, we had a nice stage 4, stage 1. Oh, tried breaking out here. It did break out, but it didn't stick, guys. That's why you need risk and money management protocols. Right here, I had a nice breakout. Above a 30-week moving average. Above horizontal breakout line on the big volume. Twice the average of the previous 4 weeks. Our side going up. So it went up. And did not survive. 1, 2. No, we don't have a valid breakout line and a valid trend line. And we didn't have any pullbacks with the price action going back upwards. So this would have been a fail. You would have exited here when you violated the 30-week moving average. Close your entry. Not super duper. Sometimes they do. That happens. Did we have? How's the volume? Let's go check out the volume. Yeah. Yeah, didn't quite happen. So always risk in money management protocols. In this trade, you would have exited close to even, because here's your entry. Oh, your entry would have been here. Your sell stop below here. Your initial sell stop. As the price action goes up, you're waiting for a pullback and then price action to go back up towards the previous high to move your sell stop, but that didn't happen. Just kept going down. And sometimes your exits is if you have a valid trend line with 3 connecting points. Violation on the 4 if you're out. Did not happen. Trying to see if 1, 2. And then your final exit point is if the trader's way, violation of 30-week moving average. And investors, you could have probably pulled the trigger right now. Or else your sell stop would have been still right down here. And you would have been still in the trade. What's the low of this one? This candle. You would have put it below that number. Oh. Low. 265. Below round number. Maybe you would have put it at 249. And low 270. So you would have still been in the trade, but staying in the trade with 30-week moving average, under 30-week moving average, never good. Never. Because you're just in no man's land, right? That means the 30-week, the moving average, if your price action is below, starting to get pulled down, that's a downtrend. So you don't want to be here and you're wasting your time. You want to get out of there and go into stage 2. That's starting again, and put your chances there. That is going to stick. So right now, they just needed more consolidation. Back into a stage 1, 2, 3. Back into a stage 3. Did not quite break down into stage 4. And now right now, stage 3 is converting into a stage 2 once again. And here we are again, guys. Look at that. Look at the volume building up here. Look at that, twice the average volume. So we had a breakout last 2 weeks ago on this candle here. Horizontal breakout line, 30 moving average going up. Here's a takeoff pattern, sell stop here, entry here, and off you go. 590, guys. It's already starting to pull back. Maybe it's going to go up a few more candles. What I'm going to do is put alert just about here. And so if ever the price action goes back below that line, I'll get a trigger close to my breakout levels. And if it's on contracting volume, that'll be a good place to enter right there. So we just have to keep an eye on volume, see how the price action goes down there. Right now, not too keen on entering now. I want to see the behavior of the stock, if it's a healthy pullback, or if it goes up on increasing volume, then I'm going to stay far away from that as possible. And that's pretty much it for VSLR. VLSR, guys, looks good. On the monthly looks good. Confirmed breakout, which target attained. So that's where we might have a pullback here. And after that, the monthly target is... after that, the bigger pattern with the monthly target is the 590. Let's go check that again. Patterns within patterns. So if ever the price action goes here close to 590, close above that, have a target $9. So that's what I'm imagining, how this could construct. Always try to imagine what could happen. And right now we're right there. So to enter right now in VSLR, I would wait for the pullback. Keep an eye on the low volume. Put an alert around here, 475. Else, we're going to wait until it consolidates close to 590. And if it busts above 590, that means I'll be in a monthly defined breakout using my classic chart trading framework. I'll be up here, guys. And then after that, I'll be looking at the bigger pattern. So that'd be even better. If we get a breakout monthly with a target at $9, we know that that's pretty strong win we have in our backs. And when we go back on the weekly, then we could see the health of the pullback that's happening right now. If it continues, if it's on low volume, and after that, the next burst going above 590, sheet going back up. After it goes down, after that, start seeing candles like that. Crazy volume. Okay, not quite ready yet. Definite stage 2 building up. Let's just wait and get this a little bit more mature, guys. All right, see ya. Ciao.